Hi, Jonathan York from Bay Financial Partners, looking at the investment markets. Quite a tumultuous week last week for equity markets. A lot of nervousness out there as oil traded down to sort of 4 or 5 year lows. Further concerns over global growth, especially in Europe, and that really sent equity markets into a bit of a tailspin. Historically, though, October is a very volatile month for shares, so it'll just be interesting to see how it all plays out over the rest of the month. Certainly, there was some pretty big volatility out there, and not just reserved for the equity market as well. Bonds in the US had some pretty big moves as well. The 10-year on one day last week had a range that would normally be associated with probably 6 months of trading, or maybe even a year, and this happened all within the space of one trading day. So the falling oil price out there can be a bit of a double-edged sword. Obviously damaging for the energy shares out there, which do make up quite a large part of the US index. But on the flip side there, if you get cheaper gasoline, that can be then converted into a little bit more disposable income for households to spend. And certainly some of the big US banks have done some research over the last sort of week or so, and one bank came up with as much as sort of $900 to $800 million that could put into the economy. Their analysis was based on a lot of families in the US sort of live pretty much paycheck to paycheck. There was a little bit more disposable income, they will be spending it. That will then sort of filter through the economy. So it can be a little bit of a double-edged sword, and it would just be interesting to see how it plays out. Certainly here in New Zealand, the falling oil price is helping to offset that falling New Zealand dollar, and that's keeping gasoline prices pretty sort of stable, a little bit lower at the pumps. Earnings in the US have been a little bit disappointing, it's fair to say, and that sort of added to the turmoil out there. But overall, it's interesting to see that most of the analysts and the banks out there haven't revised their year-end forecast yet for equity markets. S&Ps and Dows are still got some pretty high year-end targets to reach. And given the fact that we're only a couple of weeks away now from November, it'll just be interesting to see if any of those houses start to review their year-end targets and lower them. If they don't, then we should have a pretty reasonable rally going into year-end. Certainly the data coming out of the US is still pretty favourable. The latest jobless data was pretty good. Growth is still moving along at a reasonable rate. Inflation is picking up just a little bit, which you really need to sort of reflate the economy after the recent sort of downturns. So overall, the data, unless that starts to turn a little bit negative, the US still looks in reasonable shape. So it looks like it could be a nervous next couple of weeks as the market sort of tries to work out which way it really wants to go. Certainly this is the first sort of decent pullback we've seen. And most analysts are viewing it as a good opportunity to buy. We saw some pretty decent year-end targets. Certainly don't panic out there with the wild swings. If you're in there for the longer term, don't get sort of caught up in the little short-term froth and bubble out there. Just sort of keep calm. And if you've got good quality companies out there, the guidance is still good. Just stay invested. As always, it does offer some opportunities out there, and if you're interested in looking at any of these sort of shares, call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. We look forward to speaking to you soon.